So, you've had a prior foreclosure on your credit history. Okay, you're a veteran, and that prior foreclosure was a VA loan. Can you use your VA home loan again? I know I've been told otherwise. Check out this video. I'm going to break that myth and discuss foreclosures and how to get around them with a VA home loan. My name is Brad Stinson, V Mortgage Marine. In this installment of VA Home Loan IEDs, I'm going to be discussing how the VA deals with foreclosures. Bankruptcy and foreclosure are identical in the VA Lender Handbook in duration and what the lender needs to do to verify. So here we go. We're going to go to Chapter 4 of the VA Lender Handbook. We're going to look up foreclosure. What is a foreclosure? A foreclosure is where the homeowner fails to make the monthly mortgage payment and the bank has now repossessed the home. This is a foreclosure. Just because you have a foreclosure in your credit history does not in itself disqualify you from approval for the VA home loan. A lender must develop information, circumstances, and all the facts to the foreclosure before determining approval or denial. Next paragraph down. If the foreclosure was 2 years or more from the anticipated close date, you may disregard the foreclosure. So 2 years, that's where you probably have heard that. You must be 2 years from the date of discharge to the closing date. You may have heard that. Next line down, 1 to 2 years. Now, it's probably not likely that the veteran has established their satisfactory credit risk, but they must meet one of two criteria. Number one, they must have reestablished consumer credit and made timely payments each and every month. Number two, we must prove that the foreclosure was due to circumstances beyond the veteran's control, such as prolonged unemployment, strikes, medical bills not covered by insurance, etc., etc., etc. So I want to clarify that every state has a different foreclosure process. Here in the state of Michigan, we use the date that the sheriff's deed goes onto the front door. All right, now that we just discussed foreclosures and how the VA approaches that, let's take this one step even further down the road. Because if you have a foreclosure, most likely you're going to show up on the CAIVRS report. What in the heck is a CAIVRS report? Well, CAIVRS is an acronym, stands for Credit Alert Interactive Voice Response System, CAIVRS. CAIVRS is a database that hosts federally assisted loans that are defaulted from the Department of Agriculture, USDA loans, HUD, FHA loans, Department of Education, student loans, Department of Justice, judgments, and the VA. Overpayment of our GI Bill benefit, overpayment of disability compensation, and prior VA home loan foreclosure. The VA requires every lender to run this, and the VA will assign a unique number to every lender once the loan gets into processing. The VA requires that this report must be clean. So if there is a hit or it comes back dirty, how do we get around that? Well, the VA requires that some sort of repayment plan must be in place, and not only in place, but have made payments into said repayment plan. So this ties into your prior VA foreclosure. What is your entitlement for? Your entitlement is to insure a lender 25% of the loan balance. That gets paid to the lender. Therefore, it is satisfied. So you, my friend and fellow veteran, can absolutely use your VA home loan benefit again if your entitlement is there. If you had a prior FHA foreclosure, that's what PMI is for. The VA requires that there is some sort of repayment plan in place, and payments are made into that repayment plan. So there you have it. There's the truth about the VA home loan. My name is Brad Stinson, the Mortgage Marine. If you have any questions, please feel free to leave them in the comments below. If you like this video, please share it with your friends. And if you want me to break down any other topics of the VA home loan, please leave them in the comments below. Have a great week. Semper Fi, get after it.